Federal Bank is on our radar. Reported a good set of quarter two numbers just a while back. The stock has come in for some profit taking. Net profit came in above estimates, while asset quality also looks healthy. Net and gross NPA ratios have improved compared with the June quarter, that is on a quarter-on-quarter basis. To discuss quarter two numbers and more, we are now joined by Mr. Shyam Srinivasan, who is the MD and CEO at Federal Bank. Mr. Srinivasan, good afternoon. Thank you so much for joining us. Well, it's been a good quarter for the bank, record high NII and profits. This is on the back of strong growth and advances that you have reported. But what does the growth picture look like from here on? What is the growth target that you have for advances in this year and the next?
Thank you. Yes, it's been our best ever quarter at 954 crores, 36% profit growth Y on Y. And the momentum has been good. You would have noticed that our growth rates have been in the 18-20% on overall business, and it continues to be so. Our outlook continues to be very positive. I had mentioned at the beginning of the financial year, we believe 18-20% growth is very possible from where we are. The first two quarters have played quite to script. I do expect the second half, which typically is a more active part of the financial year, to be even more stronger. So on balance, I think the financial year 24 should remain as good as we've seen the first half or the last, sort of FY23. So we're quite positive about the momentum.
Afternoon, sir. Correct me if I'm wrong, but in Q1, did you guide for a margin expansion of 10 basis points in Q2? Because that's not played out. Your margins are flat, the net interest margins on a quarter-on-quarter basis at 3.16%. And what can you guide for margins from here on in the second half of the year?
I think 10 basis point improvement in margin one quarter would be like a miracle. I did not mention it. I did say improvement in margins. And we have seen a tad bit improvement, but there is also some effect of the ICRR and other issues. So to that extent, you've seen some muting of margins. Having said that, we did say in the second half, margins will be higher than in the first half. We believe we will see improvement in second half. Now, the level of improvement depends on how the environment plays out for cost of deposits. As we all know, cost of deposits is getting much higher. And in Q2 in particular, we grew our deposits much higher than our credit. We grew deposits 23%. We did take in upfront some of the deposit growth. To that extent, there was 3-4 basis point impact of the higher cost of deposits. That said, I do think H2 will see, improvement, but I don't know it'll be in the order of 10 basis points. Yes, it will see improvement.
Okay, all right. So when you say there'll be improvement, of course, you are saying that it is not something that you can quantify right now. But when are you expecting some timeline that you can tell us by when you're expecting yields to start tapering and cost of funds to steady out? Will it happen in second half itself, or we'll see something like that happening in first quarter of FY25?
That's too many moving parts. I don't think it's in the hands of one bank. It's a very market-determined outlook. If you see from our point of view, the yield on advances has been creeping up quite nicely. You may not have had a chance to see it. It's there in the investor deck. We've seen good progress on that count, and the increase in cost of deposits is beginning to taper off. And that's how the jaw will open up. And also from a bank's point of view, we've pivoted our rate of growth in terms of sort of the high yield businesses. For example, in Q2, our interest income grew 7%, while our advances grew 5%. So effectively, you're seeing higher pickup in interest income, and I suspect that will continue going into Q3 and Q4, which will give us the lift that we're looking for.
So can you break up the growth into various segments like CVs, cards, personal loans? In the last quarter, the home loan segment didn't grow as fast as the company average, the bank average. Could you provide that color on the segmental growth?
Reema, all our businesses have grown almost 5% sequentially. Retail, consumer banking, all products. That said, within retail, of course, areas like credit cards and personal loans and commercial vehicles, which are much smaller for us, have grown in the very high double digits. But I won't extrapolate that as a full year story, because over a point of time, they will start moderating. But on balance, our overall businesses, all businesses have grown sequentially 5%. And that's a very healthy place, because our outcome is a sigma of many things coming together. I would be very worried if some outweighing the other. So we would like it to be quite of even pace, and that's how it's played out.
I take that point. You're talking about most of the segments doing well at an equal pace, but specifically for MFI, because that did see substantial growth in last couple of quarters as well. The last time we had spoken to you, you did indicate that MFI disbursements have increased to 200 crore per month versus 50 to 60 crore a month. Has that continued? What is happening in that segment to see such a substantial growth, and is it something which is sustainable?
Answer is both. Yes, that's continued. It's growing at about 200 crores per quarter, per month as disbursement. And the reason it's growing is because we have increased our distribution quite materially. We are in many parts of the country. We have a lot more arrangements using PC partners. And it's an area of focus for the bank. We have, for long periods of time, I've been saying it's a business that interests us. We've considered acquisitions. Then we decided it's best grown, homegrown, because then you have a better control on the outcomes. So capability, product set, technology influence, distribution, and focus, I think, is resulting in this kind of momentum.
So, and just a word on asset quality. Your gross NPAs are the best that we've seen in the last 34 quarters. Your provisioning is coming down. Slippages are lower quarter on quarter. What can you guide on asset quality for the second half of the year? And this rising concern about the unsecured portion of the retail book. How would you comment on that?
I think you've been seeing us for long periods of time. Our asset quality has been sort of haven't grown at the cost of credit quality, and that I believe will continue to be the moment. That will be the underpinning of the bank. This quarter was particularly good. I've said that for many, but happily and thankfully, this quarter is even better than our past. Credit costs have been just 13 basis points. For the full year, we had guided at the beginning of the financial year somewhere in the 35 to 40 basis points. Thankfully, the first half is sub 25. So even if the second half is to be somewhere in the 30, 35, the full year numbers could be around 35 basis points. So I believe our asset quality momentum is strong. And in particular, to your question around unsecured, unsecured for us is a smaller part of our overall portfolio, though growing. And second, we are not growing unsecured new to bank. We're growing unsecured more to existing to bank. Third, we haven't cut our filters for underwriting, and our underwriting standards have been consistently good. So I do believe this momentum of credit quality should hold for the foreseeable future.
Okay, take that point, Mr. Srinivasan. Always a pleasure speaking with you. Thank you so much for joining us today and decoding Q2 numbers from Federal Bank, which was strong and saw record high profits and NII in this quarter as well. Bank of Maharashtra numbers at the bottom of your screen. The net profit has seen an increase on a quarter-on-quarter basis, and gross NPA has improved as well in the same time period. So banking numbers definitely the flavor of the day, and the stock has spiked to the day's high.